Well, welcome back. Let's take a look at what's going on in our grain market activity. Our quotes are provided by Bar Chart. We begin with a look at our corn market, which has been under pressure today, and it's been follow through from the overnight trade. But man, is it getting weak in the knees now. We thought it was weak before. Whew, we have July corn down 20. Look at September down 29.5. And what got into new crop December down 32.25 at 661.5, falling off a cliff here this morning. In the soybean trade, wow, we have the July down 46.25, August down 44.25 at 15.19 3/4, November down 45.25 cents right now. And in the wheat market, let's go to Chicago first. We have July down 25.25 cents. We have September down 25.25. We're at 963.5. My goodness. In Kansas City, July down 28.5, and September also down 28.5. September now quoted at 1017.25 this morning. Minneapolis spring wheat trade, July down 17.25 and September also down 17.25. It's at 1088.5. Well, let's see if we can find anything a little more less dramatic to talk about, and let's bring in Robin Cross of StoneX. He's in Chicago. What's going on in the lumber market? Is it as drastic as what we see in the grains today?
Marlon, surprisingly, no.
Really?
You know what? It's actually really refreshing to come in and not tell you it's Armageddon, raining cats and dogs here in lumber, as it always is. It's actually been a pretty quiet and orderly week. So let's get into the prices. As I say that, they actually just started beating this market up. So July lumber right now is still your lead by time, but not by open interest. September holds that title because we're getting close to upcoming expiration on July 15th. So most players are focused on September as opposed to July. So July lumber is coming in this morning at $591.20, down 20.40 with 61 trades over there. Not bad early start today with some early volume. September lumber, which you now lead by open interest, is sitting at $568.30. Down 23.20 with 67 trades over there. Majority of today's spreads have come via the spread, and we've seen some massive moves over the past couple of weeks on the spread, but I think that's just position evening going into the new month, right? So far we've had a pretty quiet and orderly week, which is, typical for a holiday week, and especially so in lumber. But regardless, let's dive into the details. So if you recall, lumber, especially while I was on vacation and everything, we have been in an absolute, complete 15-week free fall, right? From the 1477 high in March all the way down to last week's low of 517. That was a loss of 960 points or $106,000 a car in real money. Last week, I recommended traders to cover their needs against last week's low. The market was extremely oversold, and I truly felt in my gut, in my heart, that a good short covering rally was on the horizon, and that's precisely what we got. As I said, we posted that 517 swing low. We rallied basically in a little under a week and a half to this week's high of $630. That was a 113-point rally from the low, or an increase from the bottom of about $12,000 a car in real cash. But that's hardly a drop in the bucket considering, we lost 960 points going down. So, although I called the bottom, and I do believe the bottom is in, I really do, but my reasons for the call were really because it was oversold, not for any kind of, outside factor or, value seeking. I just think it was a technical move, and the market was very, very oversold, and it didn't have any more momentum to continue its decline. But technically speaking, we're no longer oversold. And I still believe that the state of the economy with interest rates and no joke on the lumber side, a complete supply chain disaster, that caution should still be warranted. I strongly advise against traders from chasing the market up in the face at all we know, unless there is some sort of extraordinary factor. And what I mean by extraordinary factor is, curtailments, fires, our typical summer spinorama stuff that we talk about to get this thing going. But right now, I'm not seeing any of that. It's actually fire season's so far pretty good. I check every single morning. But the fact of the matter is, as you know, and as I heard on the break, that, we're going to have high heat over 2/3 of this country. So that could change, but we're definitely not there yet, right?
Yeah.
And then I do believe that if the market trades back down to the lows, traders should still cover their needs. I mean, come on, $513 versus $1,400 high. Get your head out of the sand, take advantage. The mills will come up with something. They'll concoct some sort of story to get this market to turn around, and I do believe that's going to happen. But in the meantime, we might get a chance to buy a little bit of a break considering from July expiration. You know, a lot of wild stuff happens. I don't see a bunch of guys lining up for delivery. So you could see it totally trade down to the lows, hold, and still be a decent market, right? So just to summarize, be cautious. Don't be overly opinionated, and kind of pick your spots, Marlon. You know what I mean? I think guys, it's the summer is long, you know. Let the market come to you. Don't think that you're missing a trade. You know what I mean? Just kind of be cool.
Very good advice. Well, Robin, thank you for all the information. Good to hear from you again. Robin Cross of StoneX in Chicago with a look at our weekly lumber market. We'll come back in just a moment, and we'll get you updated on livestock trade, and we have some estimates for an upcoming cattle on feed report. We'll talk about it next.